A business plan is a snapshot of your enterprise, and financials make up a big part of that picture. So what financial analysis should your plan include? Our guest today has some advice on that. Joining us is the business plans coach. Tim Berry is not only a successful business author, but also founder of Palo Alto Software, which produces the nation's leading business planning software. Welcome to SBTV.com.
Thank you, Amy.
What's the most important part in conveying an enterprise's financial picture?
The financials, you need to deal, as you're doing this business plan and the planning process, with sort of what the external world expects. So we deal with kind of standard financial forms and whatever that really you're going to want a sales forecast and a personnel plan, which then become part of profit and loss. Sales forecast gives you sales and cost of sales, and the personnel plan is obviously part of the expenses. So it starts with profit and loss, but that's not nearly enough really, because you have to deal with what we call the balance sheet, assets, liabilities, and capital, in order to merge profit and loss and balance and get cash flow, which is absolutely the most important and vital. Most financial analysts assume that you're not complete unless you have profit and loss, balance sheet, and cash flow.
Now, how important is your sales forecasting in that whole picture?
Well, the sales forecast frequently is the pivot around which the rest of the plan is made. For example, when I'm reading a business plan, I will first, and I read hundreds of them every year, I will first look at the sales forecast. Now, if it's a hockey stick forecast going way up, way fast, I want to know why. I'm sort of skeptical, but maybe they can prove why. And that's number one. I want to believe the sales forecast. But then some of the other numbers pivot off the sales because there is a general expectation of gross margin. So if your sales are this, your costs in different industries should be that. And then your profit and loss, well, you want to see it more profitable than the industry average. But still, if you're coming in an industry that makes on average 8% profits on sales, that's find outable. And you come with a business plan that's making 65% profit on sales, well, whoops, now I'm skeptical. So the sales forecast tends to guide a lot of the rest because that's the way people read and expect and judge a plan.
Now, if you have a sales forecast in your plan, do you also need a market forecast?
Yes, almost always. Sometimes the individual small startup can do without a formalized professional market forecast. But really, you have to know your market in order to be able to project your sales. And there might not be a mathematical relationship. You don't have to find some spreadsheet formula that, therefore, I'm getting 1% of the market the first year and 10% the third year. But you really can't pretend that you understand your sales unless you know your market. How many potential buyers are there in the world? More important than how many potential are there, how many can you reach? Where do you reach them? Why are they going to buy from you? All of that feeds your sales forecast.
And anything else that's essential to have in those financials?
The most important part, if you do only this, do your cash flow. And it is possible. In our business plan software, Business Plan Pro, we do have an option of a one worksheet that just does one table for the financials. And here's the thing, it does just the cash flow because that pulls it all together. If you do nothing else, do the cash flow.
Great. Tim Berry, thank you for that advice on preparing your financials. You can visit www.timberry.com or check out his blog at blog.timberry.com. And you'll find a number of other topics and tips from Tim Berry in the Small Business Growth Series here on SBTV.com, where small business is the only business.